pressure. Every scar, every hit only made me better.
Okay, hey, good afternoon, everyone. This is Demetrius at Akeelah Traders and Akeelah Trading Academy. And so today is Tuesday, June 23rd. It's around almost 12:30 p.m. noontime. And so today we're going to dive in and look at how we apply our Akeelah Trading Academy, how we apply our look at the market, our break of structure analysis, the kind of unique way that we have of looking at assets and kind of determine what the market is doing. So in today's video, we're going to take a look at three different assets. And the first one we're going to look at is the NASDAQ. And so I've already pulled up the NASDAQ chart here. I've got a couple of different looks at NASDAQ, but I'm going to start with this one because we need to just take a review and look and see how we approach the market. I want to identify some clear break of structures here, some things that I've seen, and just kind of read what the market is telling us what's going on right now. So let's start with NASDAQ. I'm looking at the daily chart right now. I'm actually going to go down to the 4-hour to make this a little bit cleaner. And so as you can see, this is some key areas that I have marked up here. The first thing down here is this demand zone. And so in our approach to the markets, we follow the process that a market that is buying will continue to buy and create demand zones until there is a break of structure. And so our way of defining break of structure and zones is unique, a little bit different than most people look at. But what I want to identify here is that here on the 4-hour time frame, this is the area that I would have called the last support area, this last demand zone. So I have it identified as the daily. It's also the 4-hour range. So in this area here is where the NASDAQ should have held if we were going to continue going higher. And I'm going to zoom out a little bit so you can see, I mean, this has been a huge progression of the NASDAQ since back here in March. We peaked down, made some lows down around 22.8, close to 23,000, and since then it's just been on one consistent push up from 23,000 all the way to 30,700, near 30,008. So in our mind, nothing goes up like that forever, folks. We have to have some balances to this. So we need to just identify if and when the market is going to make that pullback move that we've been looking for. So again, here, this is the daily demand zone area. We should have held this area. So I'm going to zoom in and let you see what I have highlighted here. And this is what I'm calling a structural break. So during this time period here, let me move this. This was between, let's just say June, definitely this one, June 10th and 11th, when we pulled down here and we had closes below this, 4-hour closes below this area. That's a significant break of structure. So that's telling us that the market makers and the overall market is signaling, hey, something is going on here. It's time for this thing, this train to slow down at a minimum and possibly reverse directions and get us some more steam before we continue moving further. So that's my signal here. And so the way we approach it and we teach it, a break of structure does not automatically mean that the market's going down. It says that, hey, that's the first sign that something just ain't right here. Okay. And so what we typically expect from here, and this is how I've drawn this in our academy, we teach once we see a break of structure, the market is most likely to do one of two things. It's either going to pull back up to the source. So we have to identify where is the source of this break. Up in this area I have highlighted, this is my yellow area. This is the source that NASDAQ needed to pull back to either validate for us or to annul the fact that this break of structure means something. And so what we saw was the market did pull back up to this area. Now, if we had continued up above this area and closed above it, it says, hey, this break of structure is not really valid. Maybe it was just something abnormal, maybe some external factors going on. But the confirmation for us is once we have this break of structure, when you come back to this source area, if we get a rejection from this source area, that's the second validation that this thing is getting ready to fall. And so we did see going into last week, Monday, no, I'm sorry, that's this week. Going into last week's Monday, we did push up into here, got a rejection. It tried one more time to push back up. and that was Monday and earlier, overnight tonight. And so now we're into Tuesday. And so this gap down, the market gap down pretty substantially today. That's another confirmation for us that this rejection up here is valid. And so now what we need to look at is to say, well, what is, the plan? When we see this kind of break, okay, we've gotten two confirmations here that it's probably going to fall. Where is it going to fall? And that's why I go up to the daily. The 4 hour is what signaled this. So typically what I would expect to see is that the 4 hour, I'm looking for the source of this. Where did all of this buying action start that led us up here that eventually caused this break of structure and kind of, started to shake things up? So on the 4 hour, that's all the way down here. And actually what I would have identified as a 4 hour source will be somewhere down in this area. And in our classes we teach, more specifically, how you find this, but ballpark area, this would be what I would identify as a H4 source here. Okay. So we would expect the market to come down to this area unless there's a higher time frame that's going to overrule that. And so that's why I'm looking back between the 4 hour here. I'm going to move up to the daily. And so we need to see what the daily structure looks like. So as long as the daily structure is intact, the 4 hour would have told us it would have pushed down. But if the daily demand zone, and in this case, I told you they're kind of overlapping. So here, the daily demand zone, if the daily demand zone had not been compromised, then we would have expected that to hold the price. But the key point that I want to make here is the daily demand zone itself has already been compromised. And once we zoom out, we see the same repeated structure that we did on the 4 hour. We see we had a break of structure down, same area right here that happened with the close of this candle on last Wednesday, well, almost 2 Wednesdays ago, June 10th. So with the close of this candle, that's the first signal on the daily chart. So higher time frame is saying that something's not right here. We expect to pull back to the source. If this daily source had held and substantiated that the market wants to either consolidate in this area and possibly push up and make a new high, that would have been great for tech, great for the tech stocks, great for the tech world. But that did not happen. And so instead, we see this rejection here. And so this is why, this was yesterday's candle. Yesterday's candle closed right at the bottom of this source area. And very uniquely, it did not break it. But with the open of the market today, we see this huge gap down. I actually didn't trade yesterday, so I did not do a short there. But this would have been my rejection here. Once we see this, typically our shorts are going to be, I'm going to put in my short tool, my short position, because the way we trade the markets, or we teach to take these high probability trades, is that we're looking for this kind of a structure. So when we see the structural break, our sell limit needs to be up here at this supply source. So I would typically have a sell limit here. The stop loss needs to be significantly above this source area. So right in here, that's probably relatively safe for a daily chart. And now let's talk about the target. So before, I mentioned on the H4 that the target would have been way down here at this H4 source, unless the daily had held it up. But in this case, again, we see the daily says, hey, I've been compromised as well. So once the daily has been compromised, the target for this is, well, I'm going to go ahead and do the target, and then I'm going to show you what I think is a possible way that we don't reach that. But the target for this is going to be down here. So the daily structure here, I'm not going to push this, at least right now, down to this H4 source, because we have a pretty significant daily fair value gap here. Fair value gap and just overall market gap. So I think the target for this, for the NASDAQ, is going to be to come back down to this 24,750 area. And now let me dive in a little bit here and see on the daily what can hold this. We still have this daily demand zone here that could possibly still hold the market up. Even though we had this break of structure, this zone is still valid. What was support has turned into resistance. But what I want to point out here is that this resistance itself has not been validated. So in order to validate this resistance, this is what I would expect to see as the signal to tell us that we're going to make this big fall. If we continue to hold this zone, and the bottom of this zone is approximately 28,700. So if the market pushes down into this zone, maybe we get a little consolidation, we see some push back up, we close back above here and sustain it, then we're just going to cycle between these two areas. This is still the main resistance here. But and if this is going to be the key signal to to execute these shorts or to get out of your tech stocks. And this is, well, I'm not going to go through everything that's in the NASDAQ, but the main things that's driving the NASDAQ, you should expect to see substantial falls on those. So if we come down and close again below this daily demand zone, so a close below 28,742. Yes, that's right. Close below 28,740 or so. If we close below that, that's I would say the third validation that this thing is going to fall. And you may see some, dead cat bounces or some fakes, stop hunts to push us back up into this area again. But we are undoubtedly going to fall back down to this area here. Okay. All right. So I'm going to do a little projection tool on this. Is what I would expect to see from the NASDAQ from now. Two possible scenarios. So scenario one is, I'll do this one in maybe blue. Scenario one, again, this is all predicated on the fact that we have had this break of structure and a return to the source that's been rejected. So I do not expect that NASDAQ to continue pumping and going up. That's number one thing to understand. The second thing, these two options I'm going to show, the first one is maybe we still stay bullish a little and we dance around in here and here, but we need to ideally stay above the top of this daily demand zone. Any more penetration down below it, into it, is just not a good signal. So we could possibly come back down to here and do something like this and do these little dances and come back up here. But this area here is going to be strong resistance again before we see anything. So we could see a couple of tests up in this area. So that would be scenario one, to be bullish. I do not think that's going to happen, but as I said, I will draw that as an option for you to consider, because the key thing that we're doing with the way Akeelah, with the way we follow the market and approach the market, is we're never trying to just make projections. We're not trying to say, well, hey, I told you it was going to here, and we guessed it was going to here months ahead of time. We're trying to read the market. Our focus is read the market, follow what the market is telling us, because it's being driven by high money, smart money, big money, whatever you want to whatever you want to call it. And they're pretty much choreographing their moves. So we're learning to read those moves and follow. So that's the bullish, NASDAQ still stays bullish scenario, which I do not think is going to happen. Okay. Second scenario that I think is more likely is going to be this, because we're already, again, I've confirmed the two signs. The third one is going to be something like this. So maybe they stay up in this area a little bit. Let me give a first bump here. But we fall down and we get a close below this area. So if we get a close below here, then I would expect to see possibly, and just depending on what's going on, we may not even see a retest of this, but we could possibly see a close here, small retest, and then this thing is just going to drop it like it's hot. And we're coming back down to here. So that's the most likely scenario. I'm going to put that in red. That's what we're expecting to see, and that's why you see I already have my main arrow, drawn down here. So that's NASDAQ. I spent a good bit of time on that, but I wanted to break down how we're reading these markets and what we expect to see, what we're looking for, to give us some signals as to whether we get out. I know the tech world has been pumping a lot, and people have been heavy into NASDAQ and tech stocks and AI and all those kinds of things. So you got to be able to read these markets to understand when you need to get out. One of the hardest decisions is to pull out of something that you believe in long term because you expect it to continue to go up. So hopefully this was helpful. All right, for the second one, let's switch, and I may have to cut this short a little bit today because I don't want this video to be too long. I was going to go back and look at gold, so I'm going to take a very quick look. We did a post last week on gold. We're just going to do a follow-up on gold to see where we are. And so last week we looked at gold following the same kind of structure here. This is daily on gold. This was the daily demand zone. We had a breakup structure down here. We pushed back up into this source area. And the source area up here on gold was very, very big. But after that, we saw a rejection. And so our target that we mentioned for gold was to come down to this main source. So we're still looking for gold to continue to fall down between 38.85 to 39.70 or so. We got close here when it approached right above 4,000, maybe 40.20 or something like that. But this fall does not look like it's over. The market's not satisfied. There's still quite an imbalance down in this area. So the thing to watch out for gold is this is the H4 area that's holding this up. This is still technically a daily area as well. In fact, let me put this in here. I would say this is a H4. Well, I'd say it's a H4 main source, but I would call this more of a daily. This is a daily source, but I'm going to say this is internal. And the reason I'm saying that's internal is this whole big structure here from where gold bounced from 3,300 or so up to here, there's still a lot that's imbalanced down here. So this fall down to 39.70, just say sub 4,000, is going to be a pretty significant test. And so similar to what I showed on NASDAQ, if gold pulls down here, I'll do scenarios again. Bullish scenario is going to be gold falls down, continues to make this fall. I'm pretty, based on what it's telling us right now. Let me see, I'm sorry, I thought I drew this too. That I'm pretty confident that we're coming back down to this area. Okay, so if we do this, see maybe a small penetration into it, but we close back up above this, we could go back up bullish on gold. Okay, that's the bullish scenario. Put that back in blue. The bearish one to look out for, which is going to be, we're talking about at this point, we've seen several markets do this. This is going to be almost like a complete market reset from the last year and a half, maybe 2 years or so. But that scenario is going to play out more like we come down to this area. We do play around in here, but we eventually get a close below this. So if we get a close below this, which is roughly below 38.80, 38.70, somewhere in that range, if we get a daily close of gold below this, you may see a small retest, but gold is undoubtedly coming back to this $3,300 reset area. So that's going to be the bearish scenario and what we need to continue to look out for. So we're in shorts right now, shorting gold down, 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 down until it comes at least to this area. Once it gets here, we'll read it again, see what the market is telling us, and then make our projections from there. Okay. All right. So I didn't want to spend much time on that when we reviewed it then. The third one that I want to get in is another stock that piqued my interest the other day, and this is Eli Lilly and Company. And I want to pull into this one, and I have not done any kind of markings on this one, so I want to do this one here live and just kind of look at how I would be approaching this. So from a fundamental standpoint, I don't know what's going on with Eli Lilly. I really haven't even looked at the company, considered it at all until it kind of popped up on my radar from actually something else I was looking at, and I just happened to see the Eli Lilly name on there, and I said, hey, well, let's come in and take a look structurally, technically, and see what's going on. As you have seen, we're mostly technical traders, so I don't really give any significant weight to the fundamental kind of things. I just look at it from a market read. Okay, so let's look at this on the daily chart. Well, no, let me go to the 4 hour, because that's where most of our analyses start, on the 4 hour, and then I go up to the daily to give us a better read on what's actually happening. So here's what I see 4 hour wise. All right. So the first thing I want to do to this is come and see where my high is. And so the high at this point is right up here at around 1188 or something like that. So I want to identify my high. Just say, visually I understand where that is. Now I'm looking for my 4 hour demand zone. Where's the last 4 hour demand zone? And again, we've got more details in the way we teach this as to how we identify this. So I would find this 4 hour demand zone is going to be right in this area. Okay. So somewhere in this range in here is going to be my 4 hour demand zone. I'm going to put that in blue. So this is H4 demand zone for Eli Lilly. Okay, H4 demand zone. And so that tells me that if the market is to continue being bullish, then we need to hold this demand zone. I do not need to see a break of structure below this. A break of structure is a close. So we can come down and tap below it like this, a wick, that's fine. But once we get something like this, this is a break of structure. And it's a 4 hour, so still not, fully validated. But once again, it's kind of a signal like something's going on. At least this train is slowing down. So that's my 4 hour break of structure. From that point, I want to identify where's the source of this. And the source of this, for the source for this, we need to come back up to this area and here. So this is the break of structure source. So where did the move originate that caused this break of structure? So I'm going to find that, and that's going to be up in this area somewhere. It's probably going to be overlapping a little bit because there's not much activity in here. So my source area is right up in this region here. And we learn more specifically how to, pinpoint this area. But this is going to be my break of structure source. And so I'm going to say that's my H4 BOS source. Okay. So now that's the break of structure source, once we see a break of structure down like this, I expect the market to either pull back up into this source area or retest this demand zone that was broken. And so as you see right now, again, we've already had a couple of times the market tried to push up and retest this and got rejected. So it's showing that if this current retest area, if we continue rejecting this, it may not pull back up to the source. If that's the case, it's just going to go ahead and fall down. So where is it going to fall? The two options is going to fall. The first one is going to be we're on the H4. We got to come down to where's the source of this whole move up? Where did this whole move that made this high, where did that move originate? That's down in this area here. So this is, I'm just going to capture this area right down in here. So this is our H4 demand source. Okay, so big money, smart money, whatever you want to call it, market makers are saying, hey, we're interested in this asset and it has potential, but we want to buy it down here. And yes, the market could keep going up beyond this, but if we signal that there's a break of structure saying that, hey, a rebalancing is likely, then that rebalancing is going to drive us down to this area. So that would be back down to the 870, say 850 to 875 area. It's where the demand for this is on the H4. Now, what could stop it from going all the way down here? Let's go up to the hourly, because I always like to start our analysis on the 4 hour to give us a mid look at the market as to what's going on. But we need to go to the daily chart now, go up a higher time frame to see if the daily structure is still in place. If we still have a daily bullish structure and there has not been a daily break of structure, then this 4 hour move may not be as strong. So let's go to the daily and see. So when we go to the daily, I'm going to zoom out these candles here. So I would immediately see the daily demand zone area is actually down in here. So this is my daily demand zone area. So far, Eli Lilly is holding the daily support. So I don't see any structural concern here on the daily. I'll put this here. This will be a daily demand zone. Okay. So as of right now, this is still holding structural support on the daily. And as you see, when we had this breakdown, it's very interesting that it came right to this area. So it pushed down to here and immediately got rejected. So as of right now, the bulls are saying, no, we're confident. We want to hold this asset up above around 1070, 1080. So this is the demand zone for this. So because we've seen the first signal on the 4 hour is strong enough to tell us something is going on, but the daily is saying, not yet. So what we need to watch for is here on the daily to continue bullish. I'm going to do the two scenarios again. To continue bullish, we need to stay above this demand zone. Ideally, just like this, we don't need to see a penetration down into this daily demand zone. Although one is likely, so the market could still pull down into this area, maybe dance around a little, come down in this area, but we must stay above 1050. You cannot have a daily candle close below 1050 if we're going to stay bullish. So it can push back up into this area again. Because we had a H4 breakup structure, you may still see a little bit of resistance here, maybe a red candle or something once we get up into this area, but it'll likely push back up and keep going. Maybe above this, another kind of retest, push above and retest it, and then go bullish. Okay, so that's going to be the bullish scenario, which as of right now on the daily, it's saying fine. That's what we're looking like. But I'm still concerned with that 4 hour breakup structure. We should not have had a 4 hour breakup structure, and especially be strongly retesting this demand zone. So let's look at the bearish case. The bearish case is going to be this retest still holds. So we try to push up a little bit, but it gets either rejected, and I'm going to do them both in the same time. Either this continues to reject the 1117, 1118 area, continues to reject, or it could still possibly push into this source area. But we're going to see a significant rejection then and push back down to test this daily, and then we get a close below this daily. So a close below 1050 is a major issue. So a close below that, we still could have one more push by the market makers to fake out, to repeat that pattern that we saw on the H4, where it came down and pushed up. Expect to see the same thing on the daily. A close below, push back up, possibly to this source. A stronger rejection would just be to reject here at the daily demand zone. Reject here and go bearish. But because it's daily and this is a lot of buying power, I wouldn't be surprised if you see a push back up into this source again. There, but get rejected at the source, and then now you're going to finally fall. And as we mentioned on the other one, where is it going to fall? That brings us down to this 880 area again. Okay. All right. So that is the bearish scenario for that. All right. So hopefully this video was helpful. Hopefully you guys got something out of this. If you're getting anything out of our posts, our videos, our analyses on these markets, please give a like to our channel, subscribe, put on that notification bell so you get some updates of when we post some things, and leave us some comments. Comments are very important. I would love to see your thoughts on this, on our analysis. Hey, you're way off, I don't understand, whatever questions, those kinds of things, feel free to drop them in there. If you have a particular asset that you want us to take a look at, I'd love to do that. Usually I'm combing through the markets to find something that is would be very easy for us to explain and to review how we trade the markets on. But if you got a particular asset, drop it in the comments section and we'll endeavor to do a video on that as well. Okay, hope you guys enjoyed it. Have a blessed week, and I will see you next time. Thanks.
Trained in the fire, I was built for the pressure. Every scar, every hit only made me better.